This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back. This is Not Your Advisor with NYU Grad on Tuesday, August 6th. What a day. It was less crazy than yesterday, but there certainly was some action here today. And I'm going to label or title this podcast Bouncing Cat, because that's really all this was. And I hate to be terse or make this sound mathematical, but I'm going to use Fibonacci retracements today, and that's all we're doing. We're bouncing. And I'll summarize the day in a bit, but I don't want to get off track. Let me first start at the top and cover the, no pun intended, cover the breadth numbers. So we had 92 new highs on the NYSE. That's curious because the markets were green all day. And we had 218 new lows on the NYSE. 69% of stocks were advancing versus 28% declining. Looking at the 50-day, you had 66% below the 50-day. I think yesterday was like 70+%. So a few stocks clawed its way back above the 50. And 46% of stocks were below their 200-day moving averages, respectively. Taking a quick look at mega cap land, well, think of it this way. Everything that was red yesterday was fairly green today. That's really it. A little bit less green than they were red yesterday, but things were bouncing. I'll go over this real quickly. Microsoft was up 1.1, Nvidia was up 3.7, Amazon was up 0.56%, Tesla was up 0.89%, Meta was up 3.8%, Google, Nothing Burger down 0.06%, Apple still down almost 1%. That is not good when everyone else is rallying. Taking a quick look at the sectors or groups, I'm actually going to post both today's sector leaders as well as yesterday's sectors leaders, and you can literally see the flip-flop. So today, real estate led to the upside, 2.1%. Maybe they're thinking that, hey, after yesterday's panic sell-off, which wasn't that big of a panic, to be quite honest with you, maybe they'll cut, maybe the Fed will cut, emergency cut before September, blah, blah, blah. So real estate bounced hardest. Technology bounced hard, 1.35%. Financials were up 1.2%. Consumer cyclical up 1.1%. Basic materials, it was up almost 1%, 0.97. Industrials up 0.87. I'll post this, but compared to yesterday, every sector was green. So every sector was green today, but every sector was red yesterday. So it was just a flip-flop of a bounce. On the NASDAQ, you had 14 new highs versus 76 new lows. Still, new lows are winning, so that's not good when the stock market is bouncing. We should, if it was a true strength, we should see new highs beating new lows, but we could not surpass yesterday's sell-off. What stuck out to me, and this is again going to be in the show notes, is the Buffett indicator has finally rolled over. I'll post a chart going back into the early 70s. We are basically tying the last time we rolled over on how high this is on the Wilshire 5000 in relation to the GDP. So it's a GDP ratio chart of the Wilshire 5000. And when this gets to an extreme, then it signals assets are priced too high, and that's typically when you see Warren Buffett and rest in peace, Mr. Charlie Munger, they'll start to sell off their portfolio, and like they've been selling off Apple or 50% of their holdings in Apple. They usually do that when this ratio chart of the Wilshire 5000 versus GDP is too high. So I will post the long-term chart of that as well as a close-up, and you'll see that we've rolled over yesterday. What was strong? Well, actually, let me, before I go through that, there's a couple other free lessons or talking points I want to talk about. Let's talk about the Fibonacci levels today. So when you take a look at, I'll start with Let me start with the Qs. So obviously that's the Nasdaq Composite. If you take a look at the 1-day intraday chart, you'll know that basically the opening bell was the bottom for QQQ. We rallied all day, but at 3 o'clock, sellers came in. And take a look at this chart for the day. We lost over 78% of the day's move. Although we closed up 2.24% from yesterday's massacre, well, not massacre, it was a small sell-off, and we tried to rally today. We lost 8+% of that move. Let's take a look at the SPY. Very similar thing. We lost over 78.6% of today's move, and it collapsed the last half hour. Let's take a look at the Russell, or IWM. Same story. The bottom was the opening bell. We hit that peak around 2:30, 3 o'clock-ish. The sellers start to show up, and the last hour to half hour, we are now down close to 50% for the day of today's move. So that is not a good close. And let's take a look at NVIDIA, probably arguably one of the most important bullish impulse stocks out there. Same story. Opening bell was the bottom. And we lost close to 70% of the session's gain in the last hour of the day. So that is never good to see that. Let's continue on this thread. I'm going to include all these charts in the show notes for the free members. So take a look at the show notes. Here are some Fibonacci levels for important indices. So this one is the NDX, which is the NASDAQ 100. This will encompass all of the Mag 7 and the semiconductors that are important. We basically are rallying back to test the 200-day moving average. And if you look at the Fibonacci levels from the all-time peak to yesterday's low, we have more room to bounce. So if we can get above the 200-day moving average, we might get back all the way to the 38% retracement level. If you take a look at the NDX in context of the more recent high, when it broke below the 50-day, or it couldn't get above the 50-day and then started to sell off 3 or 4 days ago, we are clawing back to the 38% Fibonacci. So let's see if we can get to the 50-day. So we just need more data out of the deck to see what happens. I'm going to do the same exercise with NVIDIA. You'll see the lifetime peak to the low of yesterday. We are almost back at the 38.2 Fibonacci retracement. You'll see we're well below the stock split price. If you do the same exercise and count the recent high when it failed the 50-day and then moved down south to test the 200-day, you can see here we just got to about the 50% retracement level. So these are all levels that you should be watching on NVIDIA and the QQQ and IWM, etc. Let's see. I do still need to go through all the strong versus weak. So this is a pretty long list. Bear with me. These are all percentages, okay? You had SVIX, which is short the VIX, up 14.7, Uber up 10.9, Palantir up 10.3, Cura Sushi up 9.6, Hut 6.2, iBit 6.1, Red Rock Resorts 6.04, Sweetgreen 5.3, Zeta 5.1, Crocs 4.6, Freshpet 4.6, MicroStrategies 4.6, CrowdStrike 4.3, TBT, which is the inverse of bonds, which represents basically interest rates, up 4.1%, Airbnb 4%. I'm not going to go through the threes. You guys can all take a look at them. And what was weak? Volatility index pulled back from yesterday's one of the most biggest VIX days ever. It pulled back down 28%. DRV down 6.6. New York Community Bank 5.6. IREN down 5.4. Hims and Hers 5.3. Reddit 4.3. Dell 3.5. So again, everything that was pretty much green yesterday was red today. Take a look at those. Free members continue to watch yields, the Mag 7, the semiconductors, these Fibonacci levels, the moving averages above. Can they get to test as high enough to test and back test those moving averages, or is it going to fail and putter out? We're just simply seeing a bounce. I would have more conviction that today was like a near-term low. If I saw a ton of volume, we didn't see that weak-ass close at the end of the day, then I would say, hey, maybe we put in a low today and we can rally from here. But that close was pretty pathetic, and the volume was not like, 3x or 2x of yesterday's volume. So with that, I will see you all after the Wednesday session. Premium members, please stay on. I have about 15 to 20 charts to walk through today. That's my train.
Stand clear of the closing doors, please.